Have you ever just gotten that feeling that the world you live in, the one with grocery bills and commutes and paying rent, is just completely disconnected from the world of giant corporations and billionaires? It feels like we're living in two different realities. Well, that's what we're going to dig into right now.
I mean, it all kind of boils down to this one staggering contrast, right? On one side, you have the day-to-day reality for so many people, just trying to make ends meet. And on the other side, a surge in wealth that is just mind-boggling. We're talking $2 trillion in a single year for the world's billionaires. That's more than the entire economy of most countries on Earth.
So the big question is, why? How did we get here? Well, we're going to connect the dots. We'll look at a few stories that seem totally separate: a failed virtual reality world, an operating system you probably use every day, and a massive media merger. And you'll start to see how they're all part of the same pattern. All right, so let's start by looking at a few products that really highlight this disconnect. And we're going to begin with one of the most ambitious and, frankly, most expensive bets in recent tech history. $70 billion. Just let that sink in for a second. That is the jaw-dropping amount of money that Meta has lost on its Reality Labs division. That's the home of its whole Metaverse project. Just since 2020, an absolutely unimaginable investment into one single vision of the future. And this number, 900. At one point, that was the estimated number of people using its main product, Horizon Worlds, on a daily basis. I mean, think about that. A $70 billion bet for a user base smaller than your average high school assembly. The numbers just don't add up. And it turns out, even the people building it were confused. They had no idea what it was even for. The whole project was so disconnected from what any actual user might want that, get this, employees reportedly found it too glitchy and frustrated to use for their own company meetings. No joke. Okay, but you might be thinking, all right, that's some weird futuristic VR thing. But this problem isn't just in virtual reality. It's happening on an operating system that over 1 billion of us use every single day, Microsoft Windows.
You've probably felt this, right? In recent years, it feels less like a tool you own and more like a service that works for Microsoft. You've got ads popping up, it's forcing you to sign in with an online account, pushing its cloud services, and now it's doubling down on controversial AI features like Recall, which literally takes snapshots of your screen. And the backlash has been huge. People are pretty clear they don't want this stuff. Which brings us back to that big question. Why would these giant trillion-dollar companies risk alienating the very people who use their products? To get that, we need to zoom out and look at the bigger game that's being played. You see, these kinds of product decisions, they're not just happening in a bubble. They're actually symptoms of these really powerful economic systems that reward a very specific set of priorities. And spoiler alert, the user isn't always at the top of that list. Let's start with this idea from way back in the 18th century. It's called the Cantillon Effect, and it's more relevant today than ever. Just think of it like this. When you pour water onto a sponge, the top gets totally soaked long before the bottom even sees a single drop. That's kinda how new money works in the economy. It benefits those closest to the source first, driving up asset prices for them before inflation hits everyone else. So who are those people at the top of the sponge? Well, this chart makes it pretty clear. When the stock market gets supercharged, the benefits are just overwhelmingly concentrated. The wealthiest 10% of the population owns a whopping 93% of all stocks. And this whole system gets amplified by these totally legal tax strategies that are really only available to the ultra-wealthy. They call it buy, borrow, die. It basically lets you accumulate massive wealth, live off tax-free loans against it, and then pass it all down to your heirs pretty much tax-free. It's been called the most important tax avoidance strategy out there today. So, okay, that's the big picture financial stuff. But let's bring this back down to earth and see how this system has real-world consequences that can affect your wallet, your job, and even the TV shows and movies you watch. A perfect example is what's happening in the media industry. Just look at a potential deal like a merger between Netflix and Warner Bros. Discovery. We're talking about an $82 billion deal, and the main reason for it? To generate shareholder value. But who else wins from a deal like this? And more importantly, who loses? Well, if you look at how the risks and rewards are split up, it's pretty revealing. For shareholders, it's a clear win. Stock prices go up, they dominate the market. But for consumers and the creative people who actually make the content, it's a very different story. We're talking higher prices, less competition, job cuts, and studios taking fewer chances on cool, original ideas. And it's not just an academic argument. The professionals in the industry, like the Writers Guild, are sounding the alarm. They're basically saying that a monopoly like this is terrible for competition, it's terrible for workers, and at the end of the day, it's going to lead to less diverse, less interesting content for all of us to watch. So when you connect the dots between an unpopular metaverse, a frustrating operating system, and a controversial media merger, a really clear pattern starts to pop out.
These aren't just a few random, isolated incidents. They're the logical outcomes of a system where the incentives for big corporations have become completely disconnected from what's good for the public, for their customers, and for their employees.
And that really leaves us with one fundamental question. As all these trends keep accelerating, as companies get bigger and more disconnected from their users, all driven by a system that rewards shareholders above everything else, we have to stop and ask, who is this future actually being built for? And what does it mean for the rest of us?